Welcome everybody to the weekly game plan. We're going to be breaking down the markets in today's video. Then I'm going to be going private with the Victory Trades members and giving them some trade ideas. So let's get right into it. We got the S&P 500 having a down Friday, a decent down Friday, I might add, as in it's down 1.53%, which is a little bit more than normal. Usually a down day is like 1/3%, to 0.5%, but we had a gap and go to the downside on Friday, and we did break this lower end of the trend line. So what I'm looking at over here is we got lower highs, we had higher lows, and now we just have an official closing lower low in the trend count. So here's the thing. There's a good demand spot on SPY from 580 down to like this 576 area. So maybe we could bounce, but even if we do, there's going to be resistance from the breakdown point. So I'm really not bullish the SPY until we start getting daily closes above 590. And I would be super bullish the SPY if we could get back above $600 per share. Another thing to note, and I don't put too much weight on chart patterns, but it's just one indicator among many that I look at. And this is a head and shoulders pattern. We have our left shoulder right here. We have our head right up here. We kind of have our right shoulder over here. Our neckline is 580. So if this breaks down, we could see a straight move down to the 200-day moving average. Maybe it doesn't go straight down. Maybe it does a breakdown, retest, chop, bear flag breakdown, retest. Maybe it does a little zigzag lower. But I've got to be leaning neutral / bearish until we get above some of those key levels. And we'll take a look at some other markets as well. Let's take a look at QQQ, the NASDAQ ETF. QQQ, again, lower low. We do have lower highs within this trend count. We kind of have what's called an evening star reversal pattern where we have an up move, a doji day, and then a big sell candle that usually does forecast further downside. And that's where I started to pair off some of the long trades, add some short exposure. I don't have enough short exposure as I'd like. So in terms of last week's trade, last week I didn't do too well trading futures. I did decently well with the wheel and decently well with other swing trade longs and other swing trade stocks. And we'll be breaking down some more trade ideas in a bit. But when we take a look at the NASDAQ, you know, really, as long as it's underneath like 520, it always has the potential for a lower high pivot. So even if we do get an early week rally, watch out for that 520 level. Get above and close hourly and daily above 520, and we could test the top end of the range. I don't see too many great setups on the QQQ or the SPY. Maybe we could go sideways. That's another scenario. So I'm just kind of giving you guys some levels, kind of giving you some of my sentiment around the broad market. I've got some stronger sentiment analysis from me on some other markets, and we're going to talk about investing and trading in different asset classes, because if you get the NASDAQ wrong or the SPY wrong, and you're also trading stocks within the NASDAQ and the S&P, you're going to be highly correlated in your trades, and you can see extreme drawdown and extreme rallies in your portfolio. My goal for my portfolio is I just want it to trend up, peacefully trend up, no matter what environment's going on. Of course, I'd like to get some of that upwards volatility in the portfolio, as in upside profits, but we definitely want to control downside volatility. So we'll come back to the Qs in a bit, but I just want to touch on volatility right now. This is the VIX, our volatility and fear index. So when you type in VIX into your broker, a tradable asset that you could trade is VXX, UVXY. You can trade VIX on some platforms. Like I've got like a small little VIX hedge right over here, March 18th, buying the 19 call, selling the 28 call. And what's cool about this is, look at my trade price. You know, I'm spending about $100 on this, 1.0. But $100 can turn into $1,100 if the VIX closes above 18 on March 18th. I'm probably not going to be able to get the max profit, but the risk to reward is great, and it's a great way to just hedge a portfolio and give yourself some like bearish delta exposure. Okay? So the VIX, if we see the VIX breaking and holding above 20, that's telling us downside in the market is likely to continue. On the bottom of my screen, I have what's called a correlation study, and this is showing how related is this instrument to the SPX, or SPY in this case. SPX is the cash index, SPY is the ETF. A correlation coefficient of -1 means it's perfectly negatively correlated. This goes up if the SPY goes down. This goes down if the SPY goes up. A correlation coefficient of +1 means if this goes up, SPY goes up. SPY goes up, this goes up. A correlation coefficient of 0 means it's just completely unrelated. We want to trade asset classes that are close to 0 in correlation, or at least maybe like plus 0.5 to -0.5. And I'll be giving you guys some trade ideas that fit that parameter, okay? So looking at the VIX, use it to help you navigate the market. It's not always going to be perfect. Sometimes volatility can lead, sometimes volatility can lag, but you can see expanded ranges when the VIX spikes, okay? You'll see contracting ranges if the VIX is low, especially if it gets under the 200-day moving average, which is represented by this green line, okay? So let's take a look at some individual big cap tech stocks to take a look at some of our components of the market. Google had a really good day trade long on Google over 198, took profits at 200.5. That was pretty much the high. And the reason I took profits instead of waiting for the breakout was because the NASDAQ was looking like it was going to sell off. And it did. It took a fat crap. If we take a look at the NASDAQ on like the hourly time frame, that was this over here. Right over here, 526, NASDAQ starts to drop, drops almost 1% from that high. The next day, NASDAQ drops 2%. Chop day, Thursday, down day, Friday, with a mild recovery. Currently, the futures are flat right now. So again, that puts me more in the neutral mode for the overall market. Bitcoin's down about 0.25%, but it's looking like it's holding support for now. On Bitcoin, watch out for 92,000. If it breaks underneath 92,000, turns it into resistance, you could look for a further sell. Bitcoin's a great bullish breakout. I would trade this long. Me personally, I'm going to trade it long if Bitcoin's breaking above 104,000 and I see some volume. Notice though that Bitcoin, the correlation coefficient right now is plus 0.27. So what does that mean? It means it's going to move a little bit with the SPY, but really it's pretty much unrelated to the SPY. So it is moderately uncorrelated with the SPY. There's a little bit of positive correlation. But when we look at Bitcoin, whether you like Bitcoin, don't like Bitcoin, think Bitcoin's a scam, or think Bitcoin's the future, you want to analyze Bitcoin. So Bitcoin is a sentiment indicator. If Bitcoin's rallying and going up a lot or holding support, that's risk on. That tells us that investors aren't really that pressed for cash. We're not in some huge doom of a recession yet. If Bitcoin's selling hard and they're just selling it in dumps and it's not holding support and it's not catching any bids, then that's a risk off signal for the market. And you may want to look at increasing your bearish exposure and or getting more into cash, basically. So we can analyze the dollar when we're looking at what's the value of cash, dollar sign DXY. And DXY has been on a massive uptrend lately. It's looking like the dollar might even try to, it's currently in a supply zone right now. Nothing too crazy, but the dollar might reach and eclipse all-time highs at 114. And that would be a big move when it comes to currency markets. And so whenever you see the dollar rising like this, it means that cash in your account, in your bank account, is more valuable. It's safer there because you have more purchasing power with the dollar. Okay, so keep an eye on those different asset classes. We'll be breaking down a few more. Next up, I want to break down Apple, AAPL. Apple looking neutral to bearish right now. It is at support and kind of holding it right now. But as long as Apple's underneath 242, I got to lean neutral / bearish. I did take a short trade on Apple last week and exited that. So that was pretty interesting. Keep an eye on this short-term downtrend line right there. So even if it rallies, it could be a short-lived rally and bump its head near supply. Apple could find some decent support at the 200-day moving average if it ever gets there. Okay, so that's Apple. Amazon, I talked about iron condors for a while, and look at that. Iron Condor is a strategy that profits if the stock stays within a range and doesn't go too far up or too far down. And that's exactly what happened. Amazon went dead sideways. You would have made money on the call credit spreads and made money on the put credit spreads. This week, Amazon could sell a little bit further, but it does have trend line support, so it might not have a big sell side candle. Let's check out Tesla. Tesla, we talked about last week. Resistance kind of near this like 415 level. It overshot it a little bit up to 425, but since that level, Tesla dropped 9.6%. What I'm looking at on Tesla is there's a breakdown underneath like 375, 376. Okay, so if you want to day trade that short, sure, I would probably just skip that. I would like Tesla to get oversold down here to like 322. And then I'd be looking at doing something like selling TSLL cash secured puts. So TSLL is a double levered Tesla long. And what's cool about selling TSLL cash secured puts, it kind of lines up with like the 19 level. It's not always going to be perfect. The premium is not very high on that. So I need to wait for a sell-off, and maybe then I can sell the 19 strike cash secured puts. Maybe I'll sell like 4 of them and maybe try to get like 20 cents in premium, maybe 30 cents in premium. Another strategy that I posted in the trade ideas section is a back ratio trade. And a back ratio trade, it's a little bit more advanced. You buy a put debit spread and you sell a cash secured put. So I'm not going to show it on the option chain, but basically here's what happens. If Tesla sells into your range, you make like plus $200, let's say. If Tesla sells underneath your range, you're still making that $200 that's guaranteed cash, but you maybe would be underwater if it got down here like minus $100. Here's what's cool though. If Tesla goes sideways or rallies, you still make a profit because you collect a credit up front. You'd make something like plus $16. So $16 if Tesla goes sideways or goes straight up to the moon, $200 if it lands in that zone, and then you would lose in the short term if it's sold underneath that 200 level. But guess what? You can just sell covered calls at your entry. Okay, so I'm not going to go too far into the weeds of that, but I can show you my executions live. Speaking of lives, I will be live Monday, Tuesday, and Wednesday this week for victory trades, but Thursday and Friday, I'll actually be in Tampa, Florida for a CMT midwinter retreat. And this is really cool because I'm going to be able to build up my network. I'm going to be able to learn a lot from these professional money managers. These guys have been in the markets for a long period of time. I have so much respect for all of these people. And even some of them have been some of my CMT sponsors, like Matthew over here. Tyler Wood, the director of the CMT. He is one of my sponsors. And so it's going to be great to watch them speak, take notes, learn about new market trends for 2025, new investment strategies. And I'm happy to share my takeaways from this retreat with you guys. Okay, so Thursday and Friday I will not be live trading, but it's for a good purpose. Okay, it's for a good purpose. So that'll be a ton of fun. Okay, so going back to the markets, that's Tesla. I'd love to wheel Tesla if it could sell off first. Otherwise, if you do like Tesla long-term and you want to take some stabs at some leap calls, that's cool too. Tesla does have earnings on January 29th after market open. Also, be wary because the correlation coefficient on Tesla right now is plus 0.83. That means it's mostly correlated with the SPY. So it's going to move pretty much in tandem with what the SPY is doing. But occasionally, sometimes it goes through periods of non-correlation where it just does its own thing. So keep an eye on that correlation coefficient. Okay, let's check out Meta. Meta. I talked about how Meta's bullish if it can hold above 610. And since then, Meta's tested 630, rejected. It tested 630 again on Friday. I almost took 0-day call options. I almost got the fill at 606. I didn't get the fill. Oh well. I was going to buy it at 606, put my stop underneath the low of the day, and would have gotten a 3.5% gain. But alas, it wasn't meant to be. There will be new setups on Meta, but I'm just leaving that be for now. Microsoft down 1.32% on Friday. Microsoft, had this nice breakout, and we took this long over 430, took profits at like 438. I could have held maybe up to 455. I still need to improve on holding my winners, but also if you take those quick profits, you can redeploy that capital into a higher probability trade. But Microsoft over here looks bearish underneath 415. That would kind of help confirm the downtrend in the market. Earnings for Microsoft are on January 29th. Now I want to talk a little bit about semiconductors. I haven't forgotten about NVIDIA. So semiconductors, we talked about this symmetrical triangle and how I'm looking for a breakout if it breaks out on volume. SMH broke out on volume right over here over 251, got as high as 263, but then came back, and now it's back within the apex of the symmetrical triangle. This gets tricky because the question becomes, is support going to hold and then semiconductors bounce? That would be bullish for the market. Or is this a false breakout, and is it going to be a bigger breakdown to the downside because it trapped buyers up here? So one of my red trades last week was on SOXL, cash secured put. It was only a 0.5% size trade, but a big lesson that I could do better is I sold the put when implied volatility wasn't very high. What does that mean? The ranges were not pricing in a big range on SMH. And I should have noticed that I wasn't getting enough premium for the amount of risk, downside risk on SOXL. So I sold the put and quickly cut it the next day. I'm glad I did cut it because I did save myself some money on Friday. So always remember that, sure, a red trade can always come green, but a red trade can always become more red. So that's a quick little risk management lesson. So moving forward on SMH and SOXL, I really want to see if this holds or if this is going to be a false breakout, and it does break down, which will be very bearish for the market because semiconductors are a leading indicator for the QQQ ETF. Okay? So that's really, really important to understand that semiconductors drive the market. Now, it can hold, and I'm cool if it holds. I'm cool if it doesn't. I just want to analyze it right. Okay? So there's going to be resistance on SMH at the gap at 252.27. Get back above and hold above 252.27, and I think semiconductors are a go. So here's the way that I think is the best way to play SMH based off the current chart. Okay? I think dollar cost averaging, that means buy a little bit every week, a little bit. Maybe it's 1 share, maybe it's 5 shares each and every week. DCA SMH, wheel SOXL. So that means sell cash secured puts. Don't be afraid of assignment. Take the assignment like a champ. Sell covered calls at entry. Boom. That's some cash flow ideas. But then I like SMH leap calls. SMH leaps. That means buying a longer dated call option. Only if SMH gets super oversold down to 220, down to 190. 190 is the worst I think SMH can get this year. Of course, it could go worse. It's just not likely to. 190 is the worst I think semiconductors can drop. And that is a 23% drop. So if you're long on SOXL, that's triple levered, 23%, 23 times 3, that this could drop, 50, 60, 70%. I don't want to see that, and I don't want to be caught in a wheel if that is going to occur. Is that going to? I don't know. It's probably not super likely, but I got to be prepared for any scenario. The upside is that SMH stabilizes and maybe breaks all-time highs. Longer term, I do think it does that. Okay, so let's break down NVIDIA, our top semiconductor. NVIDIA, big bearish engulfing candle. What was this? Tuesday or Wednesday? And that led to a false breakout, and that's why the semiconductors got hit so hard. NVIDIA is such a big weight on SMH and on the overall SPY that it can, I kind of use it sometimes when I'm day trading to evaluate the market. So keep an eye on NVIDIA. I like NVIDIA long at the 200-day moving average, and I think NVIDIA is a load the boat if it gets down to $80 a share and load the boat down to $90 a share. So that kind of bottom zone Does it have to hold? No. My longer term price target on NVIDIA is $170 per share. Okay. So another way to play NVIDIA is to dollar cost average into NVDY. It's amazing. Even just 10 shares, you're getting $10 every month. So you're getting paid like $1 dividend every single month to hold on to this. You do sacrifice some upside gains, but let's say NVIDIA goes sideways, then NVDY will actually start to outperform because of the option strategy that they're using. Okay, so that's NVIDIA. Just wait for oversold conditions for the juicy trade. Otherwise, I do think it's okay for the dollar cost average. There's one client that I work with. He's got over $300,000 in his portfolio, and he wheels just 100 shares of NVIDIA, and he crushes it. Like, he's collecting like $100 a week on NVIDIA and just sell far out of the money covered calls. Sometimes it gets called away, sell cash secured puts, get assigned. And he's generated a ton of cash flow during this entire range. Because remember, you win if the stock goes sideways. You win big. Okay? So that's NVDA. Next up is AMD. This is more bearish. This is a bearish semiconductor. So if you're familiar with pairs trading means that you're buying one asset and shorting another similar asset. And so a pairs trade that you could take is maybe short AMD, but then buy NVIDIA. You don't have to time up your entries as much. And as long as AMD drops more than NVIDIA drops, you make money. If NVIDIA goes up more than AMD goes up, you make money. The worst case scenario on a pairs trade like this would be if AMD goes up and NVIDIA goes down. So that's something to consider. I'm not going to take that pairs trade. I'm just kind of jogging your guys' brain juices a little bit. Okay, so AMD looking bearish, especially if it's holding underneath 118. There's resistance at 121, resistance at 127. AMD is not bullish until it at least gets above 130, and even then it has the 200-day moving average to fight. It's got to fight that 200-day moving average. Longer term, I do think AMD can get back up to this like 166 level, but it may take like 3 years, 5 years. Maybe it could happen shorter term than that. I'm totally open to that. But AMD, a bearish semiconductor. Okay, I would not be taking AMD longs. There's better things to buy, and maybe I'm wrong. Maybe it zips right back up. I'm totally cool with that. I got to take it day by day. Okay. Next up is TSM, Taiwan Semiconductors. We crushed this trade last week. This is absolutely amazing. And on the Victory Talk podcast, I noted that this is setting up a breakout over 205, over 208. And it happened a lot faster than I thought it was going to. They did a fat ass gap up. Like, look at this. Gap up of 6%. That's big for a large cap stock like this. And a nice big breakout on TSM. Now we come back into the range. We have big red body bar, smaller red body bar on less volume, and then we have a doji day holding support. It kind of looks like a hammer candle. It's not perfect, but TSM looks like a buy over 210. Take short-term profits at 211.27, set a break-even stop, and then see if it can't retest those highs and even further. TSM does report earnings this week on January 16th. It's going to go up or down by quite a bit that day. So I don't know what's going to happen for earnings. Nobody can know. And the algorithms will do whatever they want with the stock after the earnings report. It could be a good earnings report and the stock can drop. It can be a bad earnings report and the stock can go up. Anything can happen. I've got to stick with the probabilities though. I'm going to hold half of my TSM position through earnings because I've got this bullish butterfly that can turn $145 into $2,000, and that expires in September. My price target on TSM is $260 per share, okay? And it's not a good habit to hold through earnings the majority of the time. I just have a higher conviction on TSM, and for me, the risk is worth it. You know, I'm risking $145 to hold through earnings. Maybe a couple shares, maybe a few debit spreads. I'm cool with the risk. If you're not cool with the risk, you simply just exit before earnings. If you accept the risk up front, you deserve the reward. If you are like mad if the stock dropped on you and you were long on it before earnings, you need to reevaluate that because it's all about expectations. All we can do in the market is just manage our positions, manage our risk. I do that with defined risk option strategies, stop orders on long shares, and I just accept the risk, and I'm pleasantly surprised if it gives me a huge upside reward. Like I wasn't expecting TSM to gap up and run up 7%, but I welcomed it. I accepted the risk from buying that breakout because it is kind of still near resistance and it could have failed. So I like TSM long story short, okay? Another one is MU. MU, I'm kind of neutral on. So maybe some MU iron condors. Sell the 90 bull put credit spread. Sell the 110 bear call credit spread at the 200-day moving average. But I'm just kind of neutral on MU. I don't see anything crazy with that. Also, on a quick note on TSM, look at the correlation coefficient, 0.17. That means that TSM is kind of plus 0.17. It's moderately correlated with the market, but not even. It's closer to 0 than it is to 1. That means TSM can do its own thing while the market gets clapped. The market could go up, TSM could drop, the market could go down, TSM could go up. It's its own wild child. Now, sometimes correlations sync up, sometimes correlations go negative, but that's a really nice trade because the correlation coefficient is 0.17, okay? Next up, I want to talk about AVGO. This is Broadcom stock. Nancy Pelosi's long on this, so it's probably a good long-term buy. But I like the retest buy at 187 better. So waiting for a retest buy at 187. If you want a breakout setup, maybe wait for 250 to get taken out. So buy over 250. The stop on that gets tricky, though. It depends on your time horizon, your risk tolerance, what type of trade that you're doing. Obviously, if AVGO breaks underneath 218.50, it could probably sell pretty hard and fill that gap and retest the prior all-time highs. But if it can hold above 242, hold above 247, break above 250, we can probably see this range, this 15% range, duplicated to the upside. So AVGO long over 250, take profit at 280, stop would have to be 220, or if you want a tighter stop, maybe 230. If you want a tight stop, 240. So that's just a potential trade idea that's not setting up now, but could set up in the future. Okay, so that's AVGO Broadcom. Next up we got is IWM. IWM breaking this bear flag down on an increase in bearish volume. So it just hit the 200-day moving average on Friday. Is that going to hold the support, or is it going to break underneath the 200-day, turn it into resistance, and sell down to the measured bear flag target of 203, 203.84 to be precise? What I could do is, if you want like some bearish exposure, maybe something like going out to the end of January and doing something like a put butterfly. So if I think it's going to find support at 203, might as well do something like buy the 210 put. So buy butterfly, buy the 210 put, sell 2 of the 200 puts. Again, take profits near 203, and then buy the 190. So this is going to cost $112. That's the most you can lose, $112. But it can turn into $1,000 if IWM closes near $200 per share at the end of January. Something to consider, a potential portfolio hedge. The bid-ask spreads are not super wide, which is nice. So that's a potential butterfly trade idea if IWM is going to continue to break down. I may or may not take that. You guys will have to ask me on the live for that, okay? So that's IWM. We broke down the VIX. Now let's talk about oil. So I've been bullish on oil for a while, ever since we broke this downtrend line. That was back in early December. So it's been about a month, and this has been a good monthly performance for oil, up 12%. When oil's up 12% in a month, that is inflationary. that is a sign that something is going on with inflation. Okay, so oil, breakout, retest. We traded UCO cash secured puts. I also bought UCO calls and USO calls. I did take profits too soon. I took profits right over here. But usually if a stock is up 3 days in a row, commodities tend to reverse often. So I like to take profits when I'm up 3 days in a row. But that's just a quick sign that inflation may be starting to spike a little bit. And that makes sense since the Federal Reserve has cut interest rates. That spurs demand in the economy because people can borrow money at cheaper rates. So there's just more spending going on. More spending, more global trade. That puts inflation into the economy. And you can see it reflected in oil prices right now. Another thing to keep an eye on is interest rates. Okay, so this is TBT. This is the interest rates on bonds. The TLT is the 20-year bond ETF. So it is a bit more longer-term bonds. So it's a basket of longer-term bonds. And ever since here, we've kind of been bearish on TLT. I haven't taken any trades on it. I actually caught this little bounce right here. But ever since it really broke that support, I posted in the Trade Ideas channel a TBT call setup where you can buy TBT calls over 37. It's actually a call debit spread. And since then, TBT is up 4.5%. So notice the inverse relationship between TBT and TLT. What's super nice about this is you can trade options on it. So you can just trade it like a regular stock. You think bonds are going to go up, buy some calls. Think bonds are going to go down, buy some puts. Super simple. Looking at the bonds, though, they look so weak. Even if TLT retests 87, that's going to be a resistance point. Okay? I do like bonds for dollar cost averaging. So DCA bonds at about 82 down to like 76. And again, if you hold the bond to maturity, you get all of your money back plus the interest rate. So it's considered a risk-free asset if you can hold it for 20 freaking years. I don't know about you, but I think we can do better than holding something for 20 years. We can make a little bit more money than that. But it's important to understand that bonds are a risk-free asset as long as the government still exists, we don't default on our debt, the world doesn't explode, everything's fine. As long as everything's fine, TLT is a great investment, but you got to let it sell first, pick those points. If we take a look at the weekly chart of bonds, it's kind of coming towards that weekly support back in October of 2023. I don't know if that support's going to hold, at least on the first touch. It might need to spike it lower and then wait for a reversal. Once you start to see it break this support, if it breaks the support, and then start to V-bounce, I think bonds and TLT are great for the wheel, great for dollar cost averaging. And if you're feeling a little bit more risky, since bonds are a risk-free asset, you can buy TLT Leap call options. So what does that look like? You go out to the options chain and you could go out to something like January 15th, 2027, and just look at buying something like the 80 call. Right now it's worth $1,100. Maybe you could get this filled at like 4.0. You could even like set that as a good till canceled order. Enter that. If it gets filled, great. I'll see you in 2027, TLT. Make me my $400 back and more. Okay, so that's a potential trade idea. Otherwise, you could wait for a shorter term trade on TBT if TBT, the interest rates could come back down. Another thing to note about interest rates is as these interest rates fly higher, that puts pressure on tech stocks, okay? These big cap tech stocks can't borrow as much and reinvest back into their business if the interest rates are higher, okay? So as TBT goes up, that's another hint that the market might sell. If you see TBT sell off, that's a hint that, hey, the QQQ might get a little bit of a rally, a little bit of a squeeze over here, okay? Lastly, I wanted to talk about gold and silver. Then I'm going to go private with my community and talk about some trade ideas. So next up we got is gold. Starting to break out on some volume. I'm probably not going to buy this breakout. I've only got a small position on gold. Last week we took profits on silver. I could have gotten a little bit more money for it, but not much more money. But took profits on silver at 27.47. I've been wheeling it since 27 for a couple of weeks and did have to see some drawdown. I even showed my position multiple times and that was down 3%, 4%, but got a nice little 2% gain on that, maybe a little bit more with the covered calls. So I don't see too much going on with silver and gold for now, but here's the way to trade it. If there's talks about peace across the globe, you know, we get the Russia-Ukraine war situated, gold could probably drop actually, maybe down to the 200-day moving average. If war starts to escalate, gold tends to do a lot better when war starts to escalate, and you could probably see a retest of all-time highs, if not further. Also, note that gold has a correlation coefficient of minus 0.5 as of right now. That means, hey, it's kind of inversely correlated to the market, but not perfectly inversely correlated. That means that maybe if SPY has a green day, gold might have a red day. If SPY has a red day, gold might have a slight green day. As you saw on Friday, SPY had a red day, gold has a slight green day. Okay? And just a quick note, looking at oil again. Oil, negative correlation coefficient. So again, it's good to look at these other asset classes. Lastly, natural gas. I know I said lastly with gold and silver, but I lied. I wanted to break down natural gas. This has been a beauty. This has been the #1 winner for me in 2025. We've been talking about natural gas. Once it breaks over this 200-day moving average, it's good for the wheel. You could grab some leap call options if you want. I gave it a price target of 20. Where UNG and natural gas is gapping up yet again, and it's probably going to be at 20. So price target achieved. It can probably still hold this uptrend for a bit. So my biggest regrets were selling covered calls above, just slightly above my entry, not well above my entry, but again, UNG buys at 15.50, take profits at 18.84. Wheel UNG, take profits on UNG, wheel UNG, cash secured puts expire worthless, get called away. And so I didn't really get to participate in a lot of this extra upside. So that is a downside of the wheel. But guess what? I also reduce my risk when UNG gaps down 8% and sells off. By the way, we nailed pretty much the low of that move down at 15. Was it? Somewhere in there. We sold cash secured puts last week and it did good. Well, looking forward on UNG, if it comes back to 17.21, that could be a reload spot for natural gas. And again, notice the 0 to negative correlation with the SPY. It's a great asset class to trade. A small sign of inflation too, with natural gas prices being up this much and oil still screaming upwards. So just keep that in mind. Ethereum's up almost 2%, so that's pretty good. Last week I sold cash secured puts on Riot. I did get assigned. I sold 12 strike cash secured puts. Stock closed right at 12. I did get assigned. Guess what? I can sell the 12 or the 12.50 covered calls, and that'll be a good amount of cash flow. That'll make my break even down at 11. So it's like I'm owning it at 11, selling it at 12.50, 13.6% for 4 trading days. Not too shabby. Okay, so I like Riot for the wheel. I like BITX for the wheel. You might have to tolerate some short-term drawdown though. But you know, Bitcoin's holding support. So it's starting to hold a little bit. And Ethereum, I'm looking to see if Ethereum can become a leader with regards to crypto land. I want to see if Ethereum can break above and hold above 37.87. And ideally this 41.42. This has been a strong resistance for a while. Look at this. Big resistance, sells 30%. Gets close, sells off 43%. Rallies 80% and now dropping 20%. Can it build enough longer term pressure to break up? Long term, I'm bullish on Ethereum. Short term, I got to wait and see. But longer term, my price target on Ethereum is 6,000. Okay. And I could be wrong. You know, anything can happen. That's why we manage our risk. That's why we wheel to get that guaranteed cash flow every week. And we wait to see what happens. So I'm going to be calling it off for the public stream. It was good to hang out with you guys. If you want to join Victory Trades, click that link in the description or join the Victory Trades Discord, Victory Unit Discord, and hit up Young Candlestick. Tell me what's up. Say, Greg, I saw your YouTube video. I liked it. Okay? Leave a comment on what you're watching too. Okay? Peace.